there, and good morning, and welcome to Indian Open right here on BloombergQuint Live. I'm Lnt Shah, and this day looks like we'll start off flattish note, marginally positive, if you will. The key is, will the bank Nifty have some weakness? Excuse me for those cooker whistles; they'll die out in a minute or two. But the point is this: that we have a day wherein there'll be a lot of stock reactions on open, and the global positivity which was there in trade yesterday. Day before, like yesterday when we opened, will not be there in the session today. So that's the small pickle that I think all of us need to be working with, that we will not have the world markets looking okay. US markets, remember, came off in trade yesterday about 1.5% after the optimism day before yesterday, because I think the report suggested that the Moderna study was not as moving it as impressively as we had thought earlier. So that is part one. Part two is that the world US futures are in the green, and therefore there is some bit of positivity there. But I think India has issues of its own. Now, what Bajaj Finance has done is one thing, and that was for the quarter gone by. I think the issues around financials remain, and I would reckon that the weakness for the bank Nifty could last, and therefore there could be shorting that is done at every rise by traders who might believe that there is a weaker hand at play, and therefore they might want to go short on it. So that is the other thing you have to keep in focus. Third, we don't have the big heavyweight Reliance supporting the market. That's the other big issue. From 1600 or northwards of 1600 that Reliance had moved up to, I think the stock has come off now quite rapidly to about 1410, 1415. There's a Macquarie note today which downgrades Reliance and says that can the free cash flow really catch up with valuations or not? They are doubting that. And there could well be a case that there should be doubts there. You don't want to be in the wrong side of Reliance, but you don't want to buy it at any price maybe. And at times, buying behaviors have shown that if you buy a stock which is exorbitantly priced, the returns are not there. So Reliance may have been the strongest stock, but if you went in at 1600, you're already 14% down. And now from 1400 odd, it needs to rally about 15% to meet your purchase price first, and then give you returns. So that's the peril of buying something which is right in the thick of things, but at a slightly higher price as well. So there are issues galore that we have at hand. I would be really surprised if we have a breakaway move today or anytime soon. But I think our experts will be best placed to speak about it. We'll get into Rusty Koza in moments from now to try and talk about that, get in our technical experts a bit later on, and get my colleagues as well to talk about some specific stocks. But two or three things that I do want to tell all our viewers about. I use this pointers in my trade setup as well when it comes to specific stocks that you should watch out for. You will watch out for Reliance Industries, viewers. You should. And the weakness that we've had, does it see some buying at 1400 odd levels? You should watch out for HDFC Bank, for example, 820, 825 or thereabouts for HDFC Bank. Can it go down further, and therefore will it see buying at close to 800? Because that is the level from which it started the first rally from 820 all the way to 946. So that's the other point. And three, and most importantly, I think we have to watch out for what happens to some of the staples names. As much as people doubted the Goldman report on Asian Paints, the stock from levels of about 1595 is now trading at around 1500. So there is weakness now creeping into some of the staples names which have largely been stable all this while. So you have issues at hand. The idea is, can we improve upon those issues going ahead? Okay, before we get in our guests though, may I request my producers to pull up some of the graphics that I had used, stock-specific graphics, the stocks to watch that I had used in the trade setup. And I want to mark some of those just to give you viewers the stocks that you should be monitoring today. So as I said, Reliance Industries, Macquarie downgraded the stock to an underperform rating from a neutral rating, and the target was 1195. So that's one stock that you have to monitor in the session today. The other one is Bajaj Finance. The Q4 profit was down 20%, but the internals were very, very strong. The moratorium is only at 27%. Compare that to the moratorium of some of the other NBFCs, and you will figure out how good a show Bajaj Finance has put up. And 72% of the borrowers, they say, are in the green and the orange zone. So that is a big positive for Bajaj Finance in that front as well. I think one of the stocks of the morning could well be Apollo Tyres. The Q4 EBITDA came in at 475 crores versus the Bloomberg poll of 359 crores. Q4 margins came in at 13.15% versus the Bloomberg poll of 9.8%, and therefore Apollo Tyres could well be that one interesting stock that you should monitor in the session today. I would watch out for Lnt Infotech. The Access Capital note on Lnt Infotech was interesting. They say that the exceptional performance in tough macro conditions, the adjusted EBIT margins expanded 110 basis points led by the revenue growth and INR depreciation. They also say that 2 large deal wins with a total contract value of $100 million adds to visibility. Viewers, the other interesting one would be Vodafone Idea. Remember, yesterday had this big surge, and a lot of people would have questioned why Vodafone Idea is gaining so much. I would guess that's because of the commentary around ARPUs. Now, if Bharti Airtel is saying that the ARPU will move, or it's at 154, 17% quarter on quarter, and they expect that the ARPUs could move up to 200, hope or expect whatever term they use, and then eventually to 300. It's not that Vodafone will be left behind, and that's a lifeline for Vodafone Idea. Never mind the debt, never mind anything else. If indeed ARPUs move up, I think there is a bit of business momentum that creeps back. Promoters get some confidence, and that's a lifeline for Vodafone Idea, and therefore, that's the other very important stock. The key is, though, it's now in the FNO ban. So even if people believe that the stock has run up too much and they want to short, they'll not be able to short the stock. And that's probably a net positive for Vodafone Idea as well. So I would reckon that the fun and games in Vodafone Idea would well continue. It may not have as big a rally as it had in trade yesterday, but cash market buying would well take the stock higher. And remember, telecom is a space firmly in focus. I can't not talk about Bharti as I end my piece and then try and get in my colleagues or some experts on board. But you have to watch out for Bharti Airtel. And the reason I say you have to watch out for Bharti Airtel, one, that the commentary is very positive in con call and the stock ran up quite a bit. But I looked at the brokerage notes that came in, viewers, post the con call. All the notes, without exception, have raised the target price. I think on average, the target price is around 700. On average, there is an ambit note which keeps the target price. It came before the con call, of course, but the ambit note pegs the target at about 800. Some of the others, Morgan Stanley, Credit Suisse, etc., all of them have maintained overweight, raised the target price, whatever the rating is, but they've raised the target prices. So 700 seems to be the new normal. Consensus rarely works, but in this case, in the absence of sectors showing growth and a commentary which is so bullish by Bharti Airtel, you might well see some positions being built there or continued there, and that could well augur very, very positively for Bharti Airtel. So I dare say, do watch out for this stock in this session. Now, the other con call which seemed to be very bullish is Bajaj Finance, isn't it? And I presume my colleague Advait Rao is joining in to give us his lowdown on what he made of the earnings and, more importantly, the conference call. Advait, I saw you attending the call and giving out all the news snippets. I'm presuming you're joining us for Bajaj Finance. Can you tell us what stood out for you in the commentary and the results?
Good morning, Neeraj. Thank you very much. So I think the main point that the management of Bajaj Finance is saying is that obviously these are unprecedented times, and given that consumption demand and sort of businesses would slow down as it is the economy is slowing down over the last year, demand revival is a long way away, and it will only come back once consumer confidence is back. But in terms of the numbers, Bajaj Finance has actually outperformed its peers and actually outperformed the NBFC market. The total loan book actually has increased by around 27% over the last financial year. This is at a time when credit growth actually has been slumping at around 6%, 7%. So what the management is saying is that they are looking to ensure that they provision against any future losses. So the company has made around 900 crores worth of provisions against any COVID-related effects that could play out on its loan book. And on top of which, they're also augmenting their collections infrastructure. So they're actually pushing it around 2,800 branch officers and various collection agents into that function, so that once things open up in the economy, depending on, various geographies and various areas of the economy opening up at different times, they can go out and start collecting their repayments. Now, as far as the larger picture impact on the book, what the company has said is that even though the bounce rate, which is essentially the number of customers whose repayments bounce or are not completed in time, that's actually tripled in the month of May compared to the previous month. So the average bounce rate before COVID was at around 12% for the book. It's now at around nearly 36% as of May. But they do not see this further deteriorating going forward, they think this is just a one-off event because of the lockdown across the country and because of the COVID-related effects. But at the end of the day, they said that they are not focused on growth. Even though they are a growth company, they're not focused on growth at the cost of pace. They'd rather pair up the balance sheet, ensure that they provision against any future losses, and ensure that the collections infrastructure is in place, and to see how they can service their clients better given the current scenario and given a time when the economy is slowing down. They know that certain lines of businesses would not be growing as fast as they were before.
Yeah. Advait, just one quick follow-up. This AUM growth numbers, the estimates, it's prudent measure, but AUM growth cut from 14% to 2%. That's a stark cut as well, even though it might be prudent in the current circumstances.
Yes, I think the two aspects to it is that one is that they've actually slowed down or actually are kind of leaving the securities lending business and the commercial lending business also. We've seen a slowdown in that book, and I think the B2B businesses and the B2C businesses, whether it's consumer B2C or rural B2C, has actually grown faster than the other books. So there are certain lines and areas where, such as auto finance, where we will continue seeing a slowdown because of the overall situation, and because commercial vehicle finance, for instance, is going to not pick up as much. But the management was saying that there is a slight pickup in sort of consumer durable loans, the demand for that, but this is not a structural change. It's more to do with the fact that people are working from home, so they might want to own a few more laptops, they might want to purchase a few more goods like that, but this is not anything to reflect the structural change. So actually, when analysts were asking for some sort of guidance on disbursement growth, the management actually was a little hesitant to give a call on what the growth figures could be for this year, because they're saying that they would only be able to judge the market from July onwards and August onwards once demand starts coming back and once the economy opens up.
Right. Okay, Advait, thanks so much for that. Well, that's Bajaj Finance for you. The key is, yes, it could have a positive start. The question is, can it sustain? Rasmik Oza joins in. Rasmik, good evening. Thanks so much for joining in. I think the institutional team at Kotak some time back had given out a note saying that they believe this will ride the storm better, and it well could. The targets set earlier then were 2,700. Now, post the con call and post the result performance, does the theory change? Because there is growth which is coming off right now, prudent as it may be.
Yeah, hi, good morning, Neeraj. I think our target prices have slightly come down from 2,700 to 2,600. If you look at the results, I think it is actually come at is far better than what one was expecting. Though there will be a moderation going forward in FY21, so we are expecting AUM growth of only 2% in FY21 with earnings dipping by 25%. But then, if you're looking at a CAGR growth from between FY20 to 22, I think a lot of the underperformance of FY21 will more than get compensated by the super abnormal growth that can come in FY22. On most of the parameters, the company scores far better than the peers in the NBFC space, with cost of borrowing coming down to around 7%, capital adequacy at around 21%, and if we take apart whatever stress is coming in terms of slippages, we are building in around 35% of the loans under moratorium to convert into maybe NPA kind of a situation going forward. But that's one-off, I think so, which will be part of FY21 number. I think valuation-wise, the stock has come down to, it's trading at around 3.3 times on the 1 year forward price to book. And on the FY22, if you're looking at a book value of around 700 rupees, and if it traded around, I think so, 3.7 to 4 times, I think you should get around 2,600 on a comfortable basis. So at now onwards, any dip, Bajaj Finance looks a good buy going forward as compared to most of the other NBFCs in this space.
Okay. Rasmik, a quick follow-up on the two big movers of the day yesterday, Bharti and Vodafone. Would you be a buyer in the pure play telcos?
Still, definitely, I think we should be buying, but yesterday's move was quite, very sharp uptick. So I think anytime in the near future, whenever there is some bit of correction in Bharti, we would be buyers because we have revised the price target also to 690. And this is on very conservative numbers that have been got built in. In fact, in the con call, the company has said that they are looking at ARPUs of around 200 rupees in the short term and around 300 rupees in the medium term from the run rate of 154 or 152 they had last quarter. So there is a lot of headroom for numbers to improve. I think going by Q4 numbers, you're heading for a 1 lakh crore revenue run rate for the next 2 years with EBITDA margins of almost 50%, incremental EBITDA margin of 60 to 70%. That means you could have an average EBITDA of around 50,000 crore per annum for the next 2 years with humongous free cash flows also happening because the capex intensity has gone down to a large extent. And the data volume has been very robust. For example, in last quarter, the data volume is up 74%. And the data usage is also far better than players like Jio and Voda Idea. So on all metrics, I think so. We could see further improvement in numbers going forward. So valuing the main business, Indian wireless business around 9-10 times EBITDA and the DTH business at around 6-7 times. I think so. We're getting this SOTP price target of around 690. Maybe 2 quarters down the line, these numbers could further improve. I think so. Going ahead.
Okay, Rasmik, stay on. So much more to talk about. We have our derivative and technical experts on board as well. But before I go to them, my colleague Nikki Mirchandani Johnson with the list of stocks that one should watch out for. Nikki, good morning.
Good morning, Neeraj. I'm going to start off with strong results first. Lnt Infotech reported good set of numbers despite this lockdown situation that we saw in the quarter. Most of the operational parameters, they've remained stable. All geographies have registered a good growth, and there is a strong beat coming in on the profitability on account of higher other income. Even in terms of verticals, barring the insurance vertical, growth was robust across the verticals around for the company. And the growth in top 5 accounts, however, that seemed to be a little weak on account of the high base in the previous quarter. Tata Power, well, the numbers were pretty in line with the estimates or decent, I'd say. But then the debt reduction, even at elevated levels right now, that remains to be heartening at this point of time. And also the progress on asset monetization, that would remain the key. Revenue was down by 8.5% for the company. Net profitability, there is a jump of 13%. And EBITDA for Tata Power on consolidated basis, YOY, has also risen by as much as 17.5%. Essentially, these results reflect the benefit of better working of Mundra Coal JVH. This, to an extent, however, has been offset by lower renewable EPC and generation and the standalone performance of the company. Going forward, we're looking at next in the list, we have Piramal Enterprises, where a Boston-based private equity firm, TA Associates, is in discussion to buy nearly 20% stake in Piramal Pharma for a consideration of roughly around $500 million. This agreement is expected to be reaching as soon as June, and this is a Bloomberg exclusive that we have. It's expected to be positive given the kind of financial pressure that the group is witnessing right now. Lastly, I'd also like to talk about SpiceJet, some amount of positive commentary coming in from that counter. It has first clarified the maintenance of adequate cash, of sufficient cash flows to cover the reduced cost of operation. The lesser payments have been mutually deferred and waived off. Now, this lesser payments is actually forms a big bulk of fixed costs. And it's also in terms of commentary, it said that, India aviation sector right now with the huge pent-up demand and a drastic fall in ATF prices is just waiting to bounce back. Could be seen as positive coming in from the counter. And last thing that I'd like to mention here is Neeraj, Ultratech will be reported the numbers today, and it will be, key will be to see what kind of volume growth can the company register after a stellar performance that we've seen from C7.
Okay, Nikki, we'll watch out for that. Thanks a lot for that. So those are a few stocks that one needs to monitor in the session today. Now, before I get to some fundamental views, it's important to get in our experts, derivative and technical experts on board to try and figure out how to approach the trade today. Chandan Tapani and Gautam Shah join in with their thoughts. Gentlemen, both of you, good morning. Thanks for joining in. Chandan, let's start off with you. What's your approach to trade today? We'll start off marginally higher if we will. What do you do post that?
Very good morning. If you look at the market setup, earlier Nifty was respecting to support of 9,050, and 2 days back after breaking the same, it corrected to us 8,800 levels. Even on the last trading session, it made the high near to 9,030, failed to surpass 9,050, and again drifted lower. So as of now, it seems that till it remains below 9,050 levels, weakness could continue. So as of now, the suggestion is continue to be with sell on bounce till it remains below 9,050. We are expecting Nifty to again retest the 8,800 levels and then fall towards 8,700 to 8,500 levels going forward. So as of now, the data setup and the price structure indicates that upside is kept and downside is likely to be there because of the weakness in BFSI segment and short built up in many private banks as well as the PSU banks in the markets.
Okay. Gaurav, what is your approach to trade today?
Good morning. Yesterday was a wonderful day for Nifty to actually give some amount of respect to the ailing markets. But we saw, even in spite of moving towards 200-point upside, the end result was still the same. We drifted from high levels and we kept on going lower. So in all likelihood, as Chandan was mentioning, the 9,000 call option commanding decent OI concentration, comfortable writing. As far as the Ichimoku studies is concerned, 9,050 is again a critical hurdle point. So as long as it is trading below levels of 9,000, it is going to be a little bit. There's a decent amount of support area of 8,800. This is a area where on a couple of occasions we have seen multiple bounces coming in on intraday basis. So in my opinion, as long as we don't break 8,800, I would not be playing for a swift move towards level of 8,600 for that matter. So in my opinion, one can, if you open on a positive note, as you mentioned, then it's a selling opportunity. Anything near 9,000 is a sell. Because suppose of 43 points, play for levels of 8,850 to 8,800.
Okay. In that light, let's talk about specific stock positioning as well. Chandan, a wonderful call given on Bharti the other day. I'll come to that in a bit. First, the two names that you want to mention in the session today yourself.
So definitely the Bharti was really a wonderful trade, and still we believe that stock has potential to move on higher side. We are quite gung-ho on the counter and expecting it to move to a 615, 650 kind of levels on positional point of view. And continuously from last 2 weeks, we are repeating the name and still believe that this entire sector is likely to do well. So Bharti, still those who are holding can hold with trailing stop loss. And talking about the new trading ideas, I have buy on escorts. This stock is holding well. Every small declines are being bought. Technically, the stock has given a consolidation breakout on the daily and the weekly scale. We have seen built-up of long position with put writing activity in this name, indicates strength going forward. So recommending to buy with stop loss of 810 or an upside target was 875. And second trade, that is sell on Bandhan Bank. We have seen that most of the private PSU and financial are likely to be under pressure. Every small bounce is likely to sold here. So recommending to sell on Bandhan Bank on a small bounce back move with a stop loss of 227 and expecting it to go down to us 208 to 206 levels.
Okay, well, that's an interesting call. Gaurav, Bse, what about your ideas for the morning?
The first recommendation today would be a sell on Infratel, where we have seen the movement has been quite strong. The position building has been good. However, there's a bearish harmonic pattern a little bit higher levels. Not at the current price, but any move. As Chandan was also talking about this sector looking some more interesting. So if there's a move towards the level of 222, one can sell at those levels. A conditional call first of 226. It can move towards the level of 212. Ultimate targets, I think it should be below. It can be below 200 in coming days. So in my opinion, Infratel is 7 rise. For positive one, I would be buy on LIC Housing Finance. So if you've seen, there's a bullish harmonic pattern being formed. Some amount of covering was also seen yesterday. A small breakout on hourly charts as well. In my opinion, one can keep a stop of 224, play for levels of 240 to 242.
Okay. Sell call on Infratel. That is one of Gaurav Bse's ideas. So do watch out for that one as well. And of course, Bharti Airtel remains strong. A stock that I have, by the way, the other interesting one could, as I said, could be LIC Housing Finance. Let's see if there's some buying there. The other interesting one could be Vodafone. Viewers, keep in mind, very big move yesterday. Actually, just before I get to Rasmik, Chandan Taparia, very quick perspective. It's now in the NFNO ban as well. A very strong traction yesterday. It's not a stock that we usually talk about, but telecom is in flavor. Any thoughts here?
Yeah, we are quite positive on telecom and still believe most of the telecom companies are likely to do well. However, Vodafone is the well-restored counter, but the way it is forming the price pattern, I think it can recover by 20-25% from lower levels. The stock which is nearer to 5.5 can move to us 7 to 8 rupees going forward. So those who are looking for some sort of risk definitely can look here for an up move. But comparatively, Bharti and other counter like Reliance would be more preferable going forwards.
Interesting. We'll talk about Reliance post-market open, by the way, because the stock has corrected so much. Could it be near some support levels? But yeah, viewers, remember the rights issue starts today, goes on, I think, till June 3rd. So anybody wants to put in, and there are various processes. You can log into your net banking accounts and then try and figure out how do you want to apply. Remember, the record date was May 14th. So if you had 15 Reliance shares, then you're eligible for one Reliance share in the rights issue. But that's a different kettle of fish altogether. I'll talk about it fundamentally with Rasmik as well after pre-open. But what I want to talk about fundamentally right now with Rasmik is the tire company that came out with a blowout set of numbers. Rasmik, do you guys have coverage on Apollo tires? What did you make of the numbers?
Yeah, we have coverage in Apollo tires. Numbers were in line with the expectation. Mainly, the domestic revenues were down 21%, but they've saved some bit on the European operations over there. The European operations were down only by 4%. They have got the benefit of lower raw materials, so gross margins have been better. But I think somewhere because of the heavy capex, depreciation, interest costs has hit the bottom line. I think adjusted profit consolidated basis was down 49% last quarter. Going forward, I think tire companies should do better than the automobile sector because almost 60 to 65% of the revenue comes from replacement market. And to a large extent, because of falling crude prices, we'll have the benefit of raw material costs also going down. Going forward, I think the metrics on an operational basis looks quite good for all the tire companies. And we would recommend buying on dips or probably at these levels also one can look at initiating exposure to the tire stocks because the OEM segment will still remain weak going forward. But the replacement side could slowly pick up. That's what our thesis is in case of tire companies.
Okay. Well, watch out. Apollo Tires could have an interesting start today. The question is, can it do more? Rasmik, of course, believes that tire companies are better bets to bet on. They could actually do better compared to the pure play auto names any which ways. And Apollo could well have a start, which is interesting. We'll talk about that with Gautam Shah on the other side of the pre-open session. But just one quick follow-up question on the fundamental side. Lnt Infotech within your coverage, Rasmik, what did you make of those numbers?
Lnt Infotech numbers have been far better than most of the other mid-cap companies which have come out with results. In fact, quite impressive on most of the counts in terms of large deal wins they have done. Revenue growth has been healthy. Profit growth has been quite healthy at around 15%. I think going forward, somewhere the scalability factor looks quite interesting in case of L&T now. And they've already stabilized the top management of Mindtree also. Maybe after some time, if they actually going forward, look at merging Mindtree also, that could become a quite a very revenue-wise healthy company in terms of scale and size. And valuations are, I think, reasonable because Lnt Infotech is one of the few companies which does far better ROEs than the larger peers and somewhere at par with TCS. So this is one company which we like in the mid-cap space and which has all the potential to scale up big time, both organic as well as inorganic in the future. And that could lead to better valuations for the company also. So results have been completely good. We have still to come out with a full update based on the earnings call. And we could have some revised price targets going, I think maybe today sometime.
Very close to market open, Rasmik. So just a quick follow-up there, 30-second answer if you can. Would you buy an L&T Infotech at 19-20 times versus an Infosys at 13-14 times?
No, in that sense, I think one should wait for all the IT companies. We would like to wait for actually better entry levels across the board.
Okay. So wait for better entry levels across the board. That's the large summation. But yeah, Rasmik said that once they come out with the notes is when maybe there could be a better picture given on L&T Infotech. But the performance is very strong. The question is, are the valuations rich enough for you to not consider it? Rasmik believes all IT names should be considered lower on. Remember, viewers, we'll talk about Apollo Tires on the technical side with Gautam Shah after the pre-open session. We'll talk about Reliance, both fundamentally and technically. Is it close to levels from which you can buy? All of that coming up in just moments from now. But the key is that the Asian screen is not as strong as it was yesterday. And we might start off marginally higher. Will we build on from there is the question. Well, the first rates all over the place. The Nifty probably has a more believable 0.7% uptick or a 0.5% uptick. Let's see if that lasts. But what is not doing well and what is doing well? M&M, Bharti Airtel, NTPC, a lot of stocks well over the place. I doubt that Bharti Airtel can have a 4% downtick, but you never know. Strange things happen. Let's wait and watch. Maybe there could be some profit booking that we could see in the session today. Somehow I doubt, but let's wait and watch. Okay, let's talk about specific names. HDFC, I don't know if it's a 3% uptick or no. BPCL, marginal. HDFC Bank, marginally higher. Nestle, marginally higher. Bajaj Finance is not there in the list of the top 8 or 9 names. So no, if anybody was expecting a pop on BAF, that isn't looking like going to be the case. If anything, it is looking like starting off 2-3% lower, 3% lower for Bajaj Finance at 1900. Clearly the AUM growth numbers downtick out there. Maybe that could be a cause of disappointment. Again, I don't want to preempt what the stock will do, but be mindful of that. The Adani Group stocks had a very big move yesterday. Can today cool off? The likes of Adani Ports, etc., showing a 9% downtick after the 8% uptick yesterday. I don't think that will last also. So let's give these rates a chance to settle down, and then we'll talk more about them. At the broader end of the spectrum, Adani Power, Tata Power, Vodafone Idea, all of these look like starting off okay. Future Retail had a down day yesterday. Looks like starting off well today. Bharti Airtel looks like starting off flattish today. I don't think there'll be a 4% downtake, but let's wait and watch. Shoppers Stop, 3.5% downtick. GPAR, well, a bunch of these names. Actually, the rates are very, very mixed. So let's just wait for these rates to settle down, and then we will talk more about them. I wonder if I can just very quickly, though, spot Apollo Tyres for you viewers, and then try and see what's happening there. Well, just a whiff of a green. Nothing too dramatic for Apollo Tyres as well. There's a bit of short build-up in trade yesterday. Let's wait and watch what happens here. Okay, let's talk about that. Gautam Shah, can I come to you? Apollo Tyres yesterday didn't quite sustain on the high levels. The results are decent. If it starts off 4-5% higher, what would your call be?
There's a very strong hurdle at the area of 95, 96. So if you are approaching those levels, then there is a level if somebody has bought, you exit or you create fresh shorts. It's not been doing too much. There's a price contraction that we are seeing. If you look at the hourly charts as well, you will see that it's forming a triangle pattern formation. Now this is not a time one should be trading or rather trading very aggressively, because either there should be a breakout which would be above the levels of 97, 98, in which case we can see a strong spike towards the level of 110, or you wait for a breakdown. So at the current juncture, even if there's a price point of 95, 96, one can keep, or maybe a risky trader can have a 2 rupee stop loss with a 4 rupee target kind of thing at high levels. But beyond that, I would not be too much interested in Apollo Tyres at this point in time.
Okay, not too interested. He believes, Gaurav says that there are some strong hurdles at these 95 odd levels. So those are levels that maybe we could see some profit booking. Let's wait and watch. There was, as I said, it's a bit of a short build up yesterday. Let's see how it starts off. The other one, which is in focus point both fundamentally and technically. First, on the derivative and the technical side, Chandan Taparia, I heard you say that you would look to buy into a Reliance. It's had multiple days of weakness. Is there a range that you're putting up, or you're comfortable buying Reliance at the current prices?
See, I think overall structure is positive and stock was doing well comparatively. However, after the announcement of the corporate action, stock fell down. 15:1 corporate action is there. But if you look at the current price as of now, I think the 1400 zone is the support going forward, where we have seen some sort of support based buying. So if it comes near to the zone and hold, then I think one can put a stop loss of 1350 for the higher target in the counter.
Stop of 1350 for a higher target in the counter. Okay. Fundamentally, Rasmik, Macquarie, one of your peers, has put out a note saying that will the free cash flow catch up with valuations? I'm presuming they are questioning that argument, and their target prices are much lower. What is your sense on Reliance Industries?
We are positive in Reliance Industries, and maybe because of this recent announcement, the stock has gone up. But in future, any dips, I think one should keep on accumulating Reliance Industries, because Reliance is only one of the few companies which has, proven the scalability of the next generation businesses, which normally people like globally, like in terms of e-commerce platform, retail, telecom, and entire ecosystem around Geo in terms of a lot of internet oriented player from there. So I think Reliance could offer a very good opportunity to capture the big growth is coming into the next generation businesses in the scale and size. And in the next 1 to 2 years, whenever they unlock value, in retail and the telecom geo, I think that could be a good return perspective from a shareholder which is looking to invest in Reliance. So any dips, I think we would recommend investors buying Reliance Industries from a 1 year, 2 year, 3 year, 5 year perspective. I think one can, from all time frames, one can look at buying Reliance.
Okay. The power stocks are the other ones which are doing so well. There is some chatter, I think in one of the news channels about Adani Power delisting possibilities. Maybe that is revving that stock up, but Tata Power numbers were not bad either. And that stock too was doing okay for itself. Rasmik, any thoughts fundamentally on the power space?
Tata Power and NTPC could be two companies worth looking in the space. The sector has got derated continuously for so many years now. But I think for next 1 year, if you're talking of a recession or a severe slowdown, then I think so the power could be one business because of its annuity cash flows, I think could do well. And I think so we have a buy rating on both the stocks. In fact, Tata Power numbers have been improving because thanks to the losses of Mundra going down on account of lower coal prices, and its Indonesia business also, not doing that great. But a lot of monetization of assets happening over there. Maybe the debt is pretty high at around 43,000, 44,000 crore, I think so roughly. But they could look at monetizing assets and, creating cash of 5,000 crore plus this fiscal year itself, which could lead to some bit of improvement in the overall profitability of the company. The stocks are very, very cheap in terms of price to book. Tata Power trades at 0.5 times. PE trading at around 6-7 times only. So I think now probably FY21 could be year for power utility companies going forward.
Okay, well, watch out. Maybe it could be a year for the power utility companies going ahead. They are trading very cheap on the valuation front. There's a bit of a policy push out there as well. All of that could augur well for these names. Do watch out. Gaurav Bse, just a quick follow-up because one of their top recommendations is starting off week. Bharti Infratel is already at 213 on the pre-open session. Would you still go short on open at around these levels?
No, as such, I had mentioned it's a sudden risk candidate for the reason that at the higher levels, the stock is expected to be very weak and can go towards 200, 180 kind of levels. That is the level I am looking for. But then again, the risk reward has to be favorable. There's a 200 DMA that is placed at levels of 227, 26. There's a foreign trend line that is placed at levels of 226, 27. There's a bearish harmonic that is also placed at 226, 227. So I'm looking up for more of a high probability trade where it's just not a recommendation that you go. When you go for high probability trade, then you can work on your number of lots that you can do on your quantity, and also your confidence is higher. So at these levels, I would not be too comfortable. The stop loss would still be the same, but then the risk would not be that interesting. So wait for a dip, wait for a rise towards 222, only then you can sell.
Okay, wait for a rise in Bharti Infratel, viewers, and then sell. But Gaurav Bse firmly believes that at higher levels, it will face resistance and it could head lower to the 200 kind of levels. So do watch out for that set of names as well. Rasmik, any fundamental recommendations, something that people can accumulate, not necessarily buy right now, but stagger out their purchases? Would it be something from the power space or is it something else?
I think our first preference on the annuity kind of a business is gas business. I think so, especially city gas distribution companies. We like Mahanagar Gas a lot because out of the three segments which they cater to, the PNG segment actually has not got affected by the lockdown. And as most of the states open up, the demand for CNG will also instantly come back as vehicles move on the road. So these two segments will come up, which are major chunk of their revenue, and a small portion of business related income will take some time. But this company, trades very attractive, trading at around 10, 11 times on a forward P multiple for 26-27% ROE profile with 4-5% dividend yield, and a surety that you'll not see much impact on earnings going forward. So for the next 1 to 2 years, I think so Mahanagar Gas should do pretty well as a company. And another theme which could pick up, we like and one can accumulate is Hindustan Unilever, because we feel that as more migrants go back to their hometown, especially the rural side, the rural economy could do far better Because it has got less impacted on account of COVID, and two is because as most of this migrant laborers go back to their hometown, more consumption is going to happen in the rural side. So companies who have got a larger presence in rural areas will stand to benefit a lot, and especially all the product categories of lever can do well in this kind of situation going forward. So we find that Hindustan Unilever could be one more good stock to accumulate in every dips going forward.
Okay. So accumulate Hindustan Unilever. That's what I think Rasmik seems to be suggesting. I just have a quick follow-up before we get to all you need to know, and that is Gautam Shah on Asian Paints. The stock has looked very weak the last few days. We're talking about staples. This one has come off quite a bit. What do the positions or the charts look here?
Well, we have seen the stock trading on negative territory, and the positions have been weak only. The only positive aspect that I can talk about right now is there's a rising trend line of last couple of years, which is placed at around levels of 1490, 1500. The stock has just about close to those levels. So if somebody wants to buy only about levels of 15, 10, 15, it will give you some sort of cushion that it's trading above comfortably trading above the rising trend line support area. And in that case, you can play for targets of 1560, 1570, keep a 1490 stop loss. I would be short only once it gives a close below levels of 1490, in which case we can see some more pressure towards level of 1400 can be expected in the name. So far, the positions are weak. The trend is not looking too strong. But yes, it's trading in the support area. So I would wait for it to either breach to create fresh shorts, or I would rather play for a bounce once it sustains above the trend line level.
Okay, we are minutes away from market open. Very quickly, let's tell you all that you need to know to stay ahead in trade today. First up, Bajaj Finance saw its net interest income rise 38% in Q4, but a contingency provision related to COVID-19 of 850 crores brings net profit down 20%. Tata Power sees its revenue drop more than 8%, but net profit rises 13% on a year-on-year basis. Boston-based private equity firm TA Associates is looking to buy 20% stake in Piramal Pharma, reports Bloomberg News. Embassy Office Parks REIT says it's received 92% of its rent collection for the month of April. SpiceJet clarifies that it's maintaining adequate cash flow to cover the reduced cost of operations. The company added that the lesser payments have been mutually deferred or waived off for this period. And three nifty companies come out of the earnings today, namely Bajaj Auto, Dr. Reddy's, and Ultratech Cement. Quick thoughts. Actually, we barely have time. Rasmik, very quickly, 30 seconds, because we're very close to market open. Can this provide a bit of a balm to Piramal Enterprises if indeed there is a deal in the pharma business?
We don't track Piramal, but I think it's a good deal for the company. And going forward, anyways, they are looking at demerging both the NBFC and the pharma business. At that point of time, I think the pharma business could generate a lot of interest and trade at very good valuation, because it has a very niche operation in the hospital generic space globally with very healthy margins of 23-25%. So that pharma business is a very good business for the company. Only drag is the NBFC, which is a big cause of concern for investors as of now.
Got it. Rasmik, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your thoughts. Chandan, Gaurav, gentlemen, to you, your top calls for the day today. Chandan, I'll come to you first.
Yeah, already I discussed about the escorts, and I think this stock can do well. So recommending to buy with stop loss of 810 for upside target was 875.
A buy call on escorts is Chandan Taparia's top call. Gaurav Bse, what about you? Your top call?
It will have to be less using for the reason that Infotech is a conditional call, so one can keep a stop loss of 224, buy for targets of 240 less using.
Okay, buy call on LIC Housing Finance with the targets that he's set out, and that's interesting. Gentlemen, just stay on. We'll take in one opening thought from you post market open and then let you go. The start promises to be very, very flattish. I wonder if the Bank Nifty will immediately see some selling on open and then correct and bring the markets down along with it. That seems to have become a template of sorts of late. Let's wait and watch if that lasts. But here come the first rates on the market open this Wednesday morning. We will start off in the red for sure. The Sensex is actually showing that. Let me not say for sure. The question is, can we build on, hold on to those 8800 levels, or will we actually succumb to some bit of selling? But here are the first rates. Actually, we start in the green, but the Nifty Bank quickly in the red, as I said. Let's see if the selling is severe or does it kind of hold out? What is dragging the markets lower? IndusInd Bank, 2.5%, very weak stock. Kotak Bank has corrected about 1.5%. There is weakness in ONGC, SBI, Hero MotoCorp, Axis Bank, Adani Ports. The list is long. Bharti Infratel is down about 3%, by the way. So that's a lot of stocks which are correcting. But I'm guessing there's an equal number of stocks which are doing well. Bajaj Finance is in the green, 2002. I wonder if it can last though. HDFC is in the green. HDFC Bank is in the green. So there's some bit of tailwind towards quality financials. I doubt it will last though somehow. But it is pulling the markets up along with it, I must say. There's a bit of green on the screen on the Nifty Bank. Z Entertainment marginally higher. L&T marginally higher. Bharti Airtel 605. So that run continues. And Reliance refuses to come into the green, I guess. It is still, okay, it is in the green, but just by a whiff, 1415, very close to those levels of 1400. What is bucking the trend really is HDFC Bank. I think that is HDFC Bank, HDFC, Bajaj Finance are giving that support to the financial space. But let's see if this lasts. There is a very strong Nifty Bank open for sure. What about the broader end of the spectrum? Want to mark a few stocks. Apollo Tyres 94.2 or thereabouts, so 2.5%. Not a big bang reaction to its numbers, but let's see if it can pick up some steam from where it is right now. Jubilant Foodworks is in the green. The results come out today. Do watch out for that one. There is strength in Deepak Nitrite, marginal at that, not too much. I'm wondering if some of the small cap names could be more active in the session. Let me look at the Bse Mid Cap Index first. Tata Power 4.5% result reaction. Lnt Infotech 4.5% results reaction. JSW Energy 2.5%, so that is doing okay. We'll have a conversation with them I think tomorrow. Torrent Power is in the green. Tata Chemicals and IGL are both in the green, so that's good news. What's not doing well? Future Retail 2.5% lower at 68.9. Havells 1% lower. Amara Raja about 1% lower. GMR Infra about 0.5% lower. So those are a few names that are correcting. Indian Hotels is marginally in the red as well. And just some small caps very quickly that I want to mark in the session based on the kind of moves that they might be having. Well, we have some down ticks for, I'm just trying to see if there's some liquid name that I can spot within that pocket. No, not too much. It's all a clutch of very, very poorly traded names. Reddington on the upside is up about 7%. There is some strength in Edelweiss, up about 5%, but it becomes a very difficult stock to trade. No, not too much in the small caps really. You are probably better off sticking to large caps and some of the mid cap names. But quick opening thoughts, since we are about 0.7% in the green. Gautam Shah, you had mentioned shorting at higher levels. Is this high enough for you, or would you wait for some upsides?
We are doing nothing actually. If you see, it's near 8,929, 8,930. What we talked about is 9,000 being a critical level. So if somebody wants to short, it has to approach near 9,000, maybe at levels of 8980, 8990. That can be a shorting area where you can keep a stop loss of 9,050, play for targets of 8850 to 8800. So at these levels, I would be a little bit skeptical. There is some momentum that we are seeing, but the markets are so volatile. 60 points up that we are looking at, maybe next 15 minutes it might be flat. So I would not be taking a bet over here. Let the market come to the level where I feel it's more comfortable for me. At the current juncture, it would not be too interesting to me.
Chandan, what about you? Your opening thoughts?
Yeah, so I think again the overall trend could remain in pressure, and I think let it bounce by more 30-40 points and then put a stop loss of 9,050 and sell in the Nifty index. And one thing one can do that writing of all out of the money strike. As of now, it seems that we are not going to move beyond 9250, 9300 level, even in the favorable scenario also. So that's why one can do the call writing of 93, 9400 strike, or can continue to be with sell on bounce back move in the market with the stop loss of 9,050 in that spot.
Okay. Chandan, is Bharti Airtel a buy at the current prices, looking at the market as well?
Yeah, Bharti is still buy. Actually, we have the overall target near to 615. We generated the trade near to 520 in the monthly report. So we still believe, but some sort of consolidation could be there. I think if it corrects by around 10-15 rupees, one should take the long position with support of 575 for upside, move to our 635, 650 on the positional point of view.
Okay. Gaurav, I have a tricky stock for you, and that is Z Entertainment. It rose to about 170 odd. There's some accumulation and then corrected for 2 days quite strongly, currently meandering around this 150 level. Do the charts suggest anything?
Yeah, tricky stock indeed. I would not be too bearish in the name right now. There's some amount of support at area of 146, 147 using that as a stop loss. One can play for a bounce back. Again, I would not be playing for a large upside. The level you mentioned from where it reversed, it was near the cloud area on the Ichimoku setup. So yes, there can be a bounce towards the level of 163, 164. That would be my target. Stop loss of 147.
Okay, and mind you, Reliance was in the red, has come back in the green right now. I think I've taken Chandan's call on Reliance. Gaurav, can I ask you, now that Reliance is open and the market is open and the Bank Nifty and the Nifty are looking so strong, would you buy Reliance at the current prices? Is it near some key supports?
To be honest, I would not be a buyer for the reason that we are seeing a bounce back, yes, but yesterday it gave a breakdown, sorry, on the hourly charts, and I'm still skeptical. Below 1400, it can test levels of 1350 in matter of 2 days, and below that, it can go towards 1280, 1300 also. So I would be skeptical. I would buy only if it sustains above level of 1430, in which case 1400 becomes a stop loss. At the current juncture, I would not be interested.
Okay, gentlemen, I asked you for your opening. I asked you for your top calls pre-market open. Gaurav, just one final thought from you. Anything that, since Bharti was a conventional and LIC Housing Finance was one call given, anything else that fits the bill on open?
Tata Consumer is one that is looking interesting for a move towards a level of 375. One can keep a stop loss of 354. That is seeing some buying interest also emerging. There is also seeing some amount of a breakout as well. Having said that, there is again a bearish harmonic pattern at high level. So in my opinion, it can go towards 375, but that is the time that one should be getting out of the stock, even if somebody has been holding from lower levels. For now, Tata Consumer is what I would be looking at.
But the strong stock is Bharti Airtel for sure, 610 and counting, going strong right now. Let's wait and watch if this lasts. But Gaurav Bse, Chandan Daparia, gentlemen, both of you, thank you so much for taking the time out and being with us today. Okay, we are about 1.5% higher, and that is the good thing. The question is, can we build on from there? And I think that's what we need to figure out. The reason I'm looking at my phone is that our next guest has given some very interesting charts on what the big term picture looks like, medium term picture looks like. That's Gautam Shah from Goldilocks Premium Research. Gautam, thanks so much for joining in and congratulations. You recently won at the Global Technical Analyst Awards declared in London as well. So congratulations on that. I think you yourself were a personal winner too. So keep that up. Tell us, what does the near term look like for our markets, Gautam?
Well, Neeraj, morning. It's really been all over the place in the last couple of weeks. You know, the market has pretty much stayed in that band. We have been of the view that this band of about 9,050 to 9,450 was a sort of a distribution phase. We broke down from this band a couple of days back with great volumes, participation across the board, and the momentum, the kind of momentum that you saw in the month of March. And we want to believe that the writing is on the wall. You know, the market is not reacting to good news, whether it's the economic package or whether it's the strength that's come from global markets, the fact that oil has run up so much, you know, VIX has stabilized. Despite all of these factors, I think the market has found it difficult to sustain above levels of 9,000. And I would want to believe that the indices are actually setting up for a leg down. I think the ceiling for the current move, which is happening today, is about 9,050, 9,100. I think that's pretty much the best case. And I think the chances of the Nifty actually losing about 5, 7, 10% from current levels is quite high. My working number has been 8820. This is the level from where the Nifty rebounded a couple of days back. It has found some support there. But once this level gets violated, we see the indices going down to 8360 and eventually 8,000. Also, if you look at the sectoral setup, there are not too many pockets that can really take this market higher. And if you really look at the banks and the bank Nifty, the fact that it's down 3,000 points from its recent high just tells you how weak it is. So while the screen might look good as of now, I think the market will once again get sold into around the level of 9,000. And this bear market, which remains in play, is going to see a lot more time correction before, you know, we can start a trend up once again.
Yeah. Okay. So that's a good summation, viewers. That there might be these bounces that we might see as we're seeing today. but Gautam believes that the larger trend is lower. Now, Gautam, let's try and simplify this. I'm guessing that no downtick or no uptick is without its own share of bounces, so we'll ignore that. My question is, what is the larger component of this downtick, and what is it that could defy it? Now, we'll come to the defiance part in a bit and what could buck the trend. Let's first talk about the ones which could lead this downtick lower. 1,000 points is not small.
Yes, Neeraj, I think first things first, we had a 10-year bull market. 2009 to 2019 was a dream run for the Indian markets. It was peppered with many bear markets in between for a couple of years. But I am starting to believe that what has happened in the last few months is a retracement of that entire bull run. While this is only two and a half months old for the Nifty. If you actually look at the mid cap and the small caps, they have been in a bear market for 2.5 years. So I think they have pretty much reached their maturity stage. But in terms of sectors, I think it's clearly the bank Nifty which will take this market down. We have been working with targets of 17,100, eventually 16,000, and then even below that. So we are looking at substantially lower levels than the ones hit in the month of March. And I think this will be followed by some of the auto stocks, some of the metal stocks, which have just continuously made lower tops and lower bottoms over many weeks. And many of these stocks have actually turned bottomless. So I think another 15-20% in some of the top line auto and metal stocks looks quite likely. The key problem, I think, going forward is going to be IT and FMCG, because, both these sectors are known to be safe haven spaces. They've usually done well when the markets have been weak. But now, for the first time in many years, on the longer term charts, you have an indication that, both these pockets of the markets can come off. We've already seen what ITC has done. We've seen the kind of underperformance HUL have seen in the last 1 month, and the way Nestle has come off in the recent past. So all of these factors suggest that the FMCG index also could see a sort of a 10 to 15% drop over the next many weeks. And if that happens, it's not going to help the market. And even IT, I think, the index almost moved 8x in the last 10 years. And therefore, there's a lot of room on the downside. So all of these spaces that I mentioned are looking quite weak. The only ones that I think that can stand out is pharma, chemicals, and insurance. And I think we've been putting this out for the last many weeks now.
Yeah, the smart traders, Gautam, don't usually go behind what is commonplace, but it might at times make it a possibility to make the trend your friend. Everybody that I talk to says financials are a lost cause right now, and the Nifty Bank is the prime short. Would you reckon that is the weakest? Sorry, I know you briefly gave that answer, but I just want to juxtapose the Nifty Bank versus some of the other weaker sectors. And what do you think you would want to play on? Nifty Bank more or some of the other weaker hands more?
Neeraj, Nifty Bank is clearly weak. We track the relative strength studies very closely. For the last 5 years, if you actually put in the Nifty Bank over the Nifty, it was in a sort of an uptrend, and this carried on for 5 years. So every time the markets did well, it was always led by the Bank Nifty, and this happened consistently over a 5-year period. But a couple of months back, as the banking stocks made new highs, the relative strength chart versus the Nifty had started to weaken. You had a lower high on that chart, which I think was a very important bigger picture shift that had taken place. And now, given the way it has come off in the last 5 to 7 days, and the way some of the top banks are looking on the charts, whether it's an HDFC, Axis, ICICI, IndusInd, State Bank is already at a 52-week low. I think the kind of setups many of these stocks have, it just tells me that it's going to get weaker and weaker. So I gave you the levels, 17,100 and then 16,000, and I don't even think that it's going to be worst case. So every time the Nifty tries to pull back, it's this pocket of the market which will not allow it to do that. And right now we are just talking about local factors. I think going forward, the kind of level some of the US market indices are trading at, I just get the feeling that they are also likely to come off. And if they do come off over the next few weeks, I think India will be impacted.
Yeah, I think the note that Gautam has put out, which is a fortnightly note on 10th May, says that the Bank Nifty is in the second leg of the bear market. Now, I'll talk about the globe as well, Gautam, but just a quick follow-up, Gautam. I heard you mention some names. I'm not asking for a recommendation, though I know that you at times give recommendations also, or just give views also. I'm just wondering, would it be advisable for people who might have some long positions in stronger names, a Bajaj Finance, an HDFC Bank, a Kotak Bank, would be advisable to get out of those long positions?
See, one will have to really take it on a case-to-case basis. Bajaj Finance has been such a huge underperformer in the last few months. It was the poster boy for a couple of years. People thought that it was invincible, and now as the Nifty has recovered 25% from the lows, Bajaj Finance is actually trading at 52-week lows. And I think the area around 1950 is extremely important if you look at the medium-term charts. If this level were to get violated on a closing basis, it will open up another 20% on the downside. So I think the next couple of days is very crucial on Bajaj Finance. If 1950 is safe, I think the stock can see a bit of a rebound, but I don't think on an end basis it's going to be sustainable because my bigger picture view on the market is negative. Coming to HDFC Bank, I think it's overowned. Still looking quite weak on the charts in comparison to the kind of rise it has seen in the last 10 years. What has happened in the last 2 months is still quite small, and I think that's the scary part. And there are indications on the monthly and on the weekly charts that HDFC Bank will eventually go down and test the March lows and maybe even break it by a wide margin. And when you have HDFC and HDFC Bank so negatively placed, you just cannot help but believe that the Bank Nifty and the Nifty would not sustain at higher levels. And I think the other stock that everybody's been talking about is Reliance and Bharti. I think we like both these setups, and I think over the medium term, I think you are going to see continuing outperformance. So any and every dip there is a buying opportunity.
Okay, I was wondering if I would be in a position to be able to ask you, because so many people have talked about Bharti and target prices, etc. raised, but Reliance very curiously, despite these investments, etc., and despite hitting highs, has come off about 13-14% from the recent highs and made a few people a bit nervous. You reckon that it dips, it might be a good stock for people to initiate some positional longs, Gautam?
I think it's temporary, Neeraj. I think we put out a report that around 1600 Reliance would have completed a V-shaped recovery. If you have a look at the charts yourself, you will understand. And let's not forget, Reliance moved up from 900 to 1600. It had a volley of good news every passing day. And sometimes the market reaches a point where it stops reacting to good news. And it was a sort of a crowded trade as well. 1600, 1620 was a major resistance. So I think this correction is very normal. I think somewhere in the 1350, 1400 zone, it will once again find a lot of support. And I think the rally in Reliance or the outperformance in Reliance is here to stay, not just from a weekly perspective, but over the next 3, 6, 9 months. So, it's one of those stocks where you should be very, very overweight in your portfolio.
Okay, so stay very, very overweight in your portfolio. Now, Gautam, I want to juxtapose the global picture as well. And I think in your note that you put out on the 20th of May, which is today, I think, you're saying that NASDAQ is the index to watch. Why is that the case?
Well, NASDAQ has been the poster boy index. If you really track the world equity markets, I think what a phenomenal rebound that it has seen. If I'm not wrong, it is just about 10% away from its highs of the month of March. So gross outperformance in comparison to the S&P 500 or the Russell 2000 or the Dow. And the components of the NASDAQ, some of these stocks like Apple, Google have done so well that it just seems as if this fall of the last 2 months was a correction. But we remain of the view that even the US markets are in a bear market. They had a wonderful 10-year run. The US markets are correcting that entire 10-year run, and therefore there is a lot more room to fall. And now as we speak, you have the NASDAQ index at a very important level. You have triple negative divergence, you have a gap that has been filled, just to put some technical points in there. And the chances of the NASDAQ index reversing from here is quite high. And it's been seen in the recent past that whenever NASDAQ starts to correct or starts to underperform, the world is slightly different. The world is in a different, the equity basket is in a different space altogether. So I think this really holds the cue for what happens over the medium term. And even on the Dow, I think our mentioned level of 24,700, despite a few attempts, has been respected. And I think the chances of the Dow actually losing substantial ground from here is quite high.
Okay, now the other question, Gautam, is something that pertains to a lot of Indians, right? Gold. And fundamentally, Gautam, there are a couple of factors that hit it, right? I mean, that impact it. One is the movement in gold prices itself globally because of inflation or otherwise. But two, a lot of people forget that the currency movement, and if the INR depreciates, then that also has a bearing on the gold price. What would you do with precious metals? I see that you're writing about silver as well. Maybe you talk about that too. but I do want to talk about what is the largest or the most widespread asset class in the Indians portfolio, that is gold. Let's do gold and do silver, and then we'll wrap up.
We remain extremely bullish on gold, Neeraj. I think we've maintained this call for the last 6 months now. And let's not forget, gold has come back after a 5-year consolidation phase. And the manner in which it has come back and the kind of copybook uptrend that it is right now, I just want to believe that in today's environment and the kind of charts that gold has currently, it is likely to move towards a level of $1,800. And eventually, I do see lifetime highs of 1,920. And in today's dynamic environment and the kind of issues that we are facing, it's clearly a safe haven play. And you are seeing that impact on the charts. So I think this rally is here to stay. One should easily have 15% weightage in one's portfolio into gold. You know, if you're going to be low on equities, you better top up on gold, silver, and some of the other commodities. So we remain positive, and every small dip on gold is a buying opportunity. On the other hand, silver is very interesting because it had a very peculiar relationship with the other, precious metals. And the manner in which silver has come back in the last couple of weeks, it just tells me that this entire 7-year-long underperformance could be coming to an end. So we are looking at a possible target of about 18.5 to 19 on silver. And because gold is already up so much, silver might actually be a better opportunity from a risk reward perspective. So with just about 5-7% downside, I think a 20-25% upside on silver over the next 6 to 12 months looks very likely. So both these precious metals, we would be extremely positive.
Okay, Gautam, let's call it a day. Maybe some other time when we talk about in the next 1 month or 1.5 months, I would love to talk about what could buck the trend. Maybe by then we might be staring at the index substantially lower from where we are right now. But it was lovely chatting to you today, Gautam. Thanks so much for the overarching view on a lot of things and not just equities. Appreciate your time.
Thank you, Neil. Thanks.
And of course, congratulations to Gautam for winning that award as well. By the way, just looking at the markets yet again, and there is some gains for UPL, ITC, GAIL. So the market is holding on fine. What is correcting is Infratel, 2.5%. Bajaj Finance is now at 1945. Infosys, Asian Paints, Coal India are some of the others that are looking slightly wobbly. But all in all, it's not been a bad morning. Let's see if this corrects during the course of the day. Viewers, thanks for tuning in to this leg of Indian Open.
How many places can you be at once? What if we said 9? BloombergQuint Live,